Hi, I'm Nancy Wasden with Wasden Closing Group. I'm a closing attorney, and while today is not intended to be legal advice, I did want to answer a question that comes up a lot of times this time of year. I sold my house this year, but I received a property tax bill. What do I do? First, understand that property taxes are paid in what's called arrears. What that means is it's payment for services already rendered. In other words, the tax bills that are coming out now are payment for the whole year of this year. It kind of looks like this. January to December is the bill, and it comes out kind of in the middle toward the end here. That's different than HOA dues, for example, which are paid forward for the year, usually in the beginning of the year, paid forward. Second, know that the tax assessors do not update their records rolling through the year. They usually do it in the beginning of the year once, January or the first quarter. The question still remains, what do I do with this? Do I have to pay it? Do I have to do anything with it? The answer is you probably don't have to do anything with it, and no, you probably don't have to pay it. In a standard transaction, the closing attorney takes the taxes from the prior year and does what's called prorate them. That means we take the year up until the day of closing and we debit the seller. The seller owned the house until that day, so they owe those taxes. For that same amount of time, we credit the buyer. The buyer will pay for the entire calendar year of taxes once the bill comes out. So we give them a credit for the time of the year they did not own the house. I'll say that again. The buyer is responsible for the current calendar year once the tax bill comes out in a typical transaction. If the buyer has a mortgage, it's possible they have what's called an escrow account. One of the purposes of the escrow account is to pay the property taxes. Lenders know when the bills come out, and they definitely want those bills paid, so it will probably be handled that way. If it was a cash transaction, the buyer may not have received a copy of the tax bill, and it would be a courtesy to give them a copy. Tax bill information is available through each county's website, through the tax assessor and the tax commissioner. You can Google the county name and the tax commissioner, and typically you can get to the site. It is public, and you can look it up that way, and often you can pay it online. But Nancy, the bill is in my name. What if the buyer doesn't pay? Well, you have a closing disclosure or a HUD or an ALTA statement showing that you sold the house, and that is your proof that you sold the house. You're no longer responsible. It may look something like this, and here's where the taxes are prorated for the HUD. And here is a seller disclosure, and it's usually here. As I mentioned, the records won't be updated until next year, and that's when the new name will be reflected. But this, your paperwork, shows that you sold the house. I hope this helps. A very common question that comes up this time of year with people who sold property before the tax bills came out. Thanks for watching.